What's up, guys? Welcome back to my YouTube channel. Today we're going to cover all things candlestick charts. So whether you are a complete beginner and you don't know how to read them just yet, or maybe you are somebody who's been trading for a little while and you want to get a little bit more advanced in how you interpret candlesticks, there's going to be a part in this crash course for each of you. So if you are brand new, make sure you watch this from beginning to end. If you already have some experience and you understand things like the anatomy of a candlestick, you might want to skip part 1 and go into number 2 and number 3 here. Before we dive in, I do want to cover two things. One, I will never direct message you on any platform. So if anyone is direct messaging you pretending to be me, just know it's a scammer. I will never do that. Please block and report them. That also goes for commenters down below pretending to be me. And number 2, I do have a free quiz down below that will cover the best trading strategy to use based on your personality type. So if you haven't taken that already, I highly encourage you go check it out. It's linked in the description box. So in this candlestick charts full guide for today, you can expect number 1, we're going to cover the crash course on the anatomy of a candlestick. So if you're brand new, or maybe you just need a refresher, this will be very, very important for laying your foundation of understanding candlesticks. And then we'll move into number 2, which is top 3 candlestick patterns plus how to use them in reversals. So I personally love to trade reversal patterns in the market. And a big part in recognizing reversal patterns is paying attention to candlesticks, how they are forming and how they are reacting at key levels. So I'll go over my top 3 favorite in number 2. And then we will wrap this up with number 3, which is interpreting the psychology of buyers and sellers using candles. Now this is getting more advanced, and this is where I want you guys to land in your candlestick journey with this crash course, because you can recognize patterns all day long, but if you don't understand the psychology of the candles and what it means at key levels between buyers and sellers, you're not going to get that upper hand and edge you need to succeed. Okay, diving right in, let's start with candlestick anatomy. So there are 2 basic candles in the market, right? Red and green, bearish and bullish. Now, you might have changed your candlestick colors already. If not, I know a lot of traders like to do that, but the pretty general candles are red and green. We're going to start with the bearish one here because there's going to be a difference between both when it comes to the anatomy. So the anatomy here on the bearish candle, you can see we have a high, we have a wick. So that's also referred to as a shadow. I personally like to call it a wick. Then you've got the open of this candle right here, which is the open of the body. This is the body of the candle. Now, once we opened, bears pushed this candle down. We closed, but we also hit a low, which represents the low wick before closing. Now, the fact that we opened high and then closed low formed a bearish red candle. Now, the opposite is true for a bullish candle. So you've got your high, your wick, the close is at the top, and the open is at the bottom, then your low wick here. So what this is saying is the candle body, which is represented in green, we opened down here, but bulls were able to push this candle up, closing higher, representing a bullish candle. So this is the basic anatomy. If you need to pause and study this chart for a second, please feel free to do so. But I'm going to give you little tips and tricks along the way that makes it easier if you are new to understand very quickly what a bullish versus bearish candle looks like. But before we move on, just understand that key concept that if a candle opens high and it closes lower, that is most likely forming a bearish candle because it opened and was pushed down. The opposite is true with the bullish candle. If a candle opens and then pushes higher, closes higher, then that will form a bullish candle. So it's all about where did it open and where did it close. If it opens high and closes low, meaning they pushed it down, hence this downward arrow, bears are in control. If we opened low and then we got pushed up and closed higher, bulls are in control. So let's look at some more examples when it comes to candle patterns, bearish versus bullish, and how just paying attention to the body and ultimately the wicks can tell you a larger story when it comes to that trade and who's in control. So for me, I love analyzing both where the bodies land and where the wicks land. So for example, these bearish candles all right here, you can see they have something in common. They have long wicks on the top of the candle body. So long wicks on the top of the candle body is just telling me that if there was a key level right here and we are getting pushed down, there are potential sellers causing the long wick and the candle to close lower. The opposite is true for this bullish reaction set of candles. You can see that we have long wicks on the downside here, and that means there are potential buyers with orders underneath pushing the candle up, creating those long wicks to the downside. So I like to think of them kind of like a rocket, right? So if you've got a rocket crashing down, you're going to have the wick, which could represent smoke or whatever, but it looks like a rocket crashing down. That's bearish, right? That's bad. If you're crashing down, you're going in the wrong direction, most likely. And if the opposite is true and you've got a rocket pointed to the upside and going up, then that's good, right? You want that rocket to go as high in the sky as possible, and that's a very bullish reaction. So that's a good thing if you are long. And if you are short and you're bearish, then this is also a good thing. So there's no good and bad candles. It's just recognizing what a bearish versus bullish candle and making sure you're on the right side of that trade when these candles start to print. So the little hint here is if you're paying attention to the wicks, that will tell you a big story, because long wicks on the top usually means bears are in control, pushing that candle down. And then if long wicks are on the bottom, that usually means bulls are in control, pushing that candle up. Okay, so let's go over some actual examples before we move further. And that's just recognizing the very basics of bullish versus bearish candles. Now, one obvious factor is you've got the red candles, which usually mean bearish, and the green, which mean bullish. Right now, I'm on a 1 hour time frame, meaning each candle is 1 hour in length. And if you change it to, let's say, 10-day, 30-minute, then these are now 30-minute candles versus 1 hour. But we're going to stick to the 1 hour just to kick this off. One thing that I love to do is pay attention to how candles react and their anatomy and what they're doing, where their wicks are, candle bodies land based off of key levels. So for me, I had a key level of 81.37 on oil, and I played that this past week, and it worked out very nicely. But what I was looking for as we approach that key level is how are the candles reacting? And so now that you guys know the basics of bullish versus bearish, you can see the first time that we reached this key level, which is right in here, we had what looked like a bearish candle, but this can also be considered an indecisive candle. We'll go over those in more detail in just a minute. So this candle right here dipped below that level, but you can see we did have a long wick on the bottom and a long wick on the top. Now, if you want to be a little bit more technical, the wick on the bottom was longer than the one on the top, and the candle body closed pretty neutral of the candle. So there wasn't a lot of information other than it's a red candle, right? And that might tell you, oh, we're still bearish. There's other things you can throw in here, which we'll cover a little bit later, but right now, just looking at candles, now I want to see how the next candle prints, because this candle to me looks indecisive. Maybe sellers are getting exhausted. So the next candle is going to be very important. You can see the next candle opened up green. We had a long wick on the top side, but it doesn't necessarily mean that it's bearish just because it has a long wick on the top side. We also opened higher than this previous candle, and we also opened 50% higher, which is an even stronger indicator. So just looking at basics on this chart here and how the candles were reacting, the obvious first thing to see is red versus green. So the red candles then turned green, and we also reversed. You can see that happened once again here, but these are much better examples of bullish reaction candles, because look at these very long wicks on the bottom here. That's what you want to see if you're looking to go long at a particular key level or area of interest, is you want to see these long wicks on the bottom, and the red candles that form the downtrend then turn green. That's just the basic way to put it. Now, if you were looking at potential short or resistance area, you want to see the opposite. So I had a potential level of resistance near 84.59. These are my fibs based off of my fib strategy. And you can see here that this is a very, very long wicked on the top green candle. So to me, this is kind of telling me the same thing that this candle did. There's a lot of indecision here. Yes, we're green. Yes, we had a strong move up, but we're near a key level of interest. So I'm going to pay more attention to how the next candle reacts. And the next candle opened up very bearish, very red. We had a candle that pushed up. We opened, because remember it's red, so we opened here, but we could not push higher, so therefore we turned red and we closed lower. That is a bearish sign. We are no longer making higher highs when it comes to the candles. Now we are switching and making lower highs. So we have a high, we have a lower high, and another lower high. If you are not familiar with market structure, I highly recommend you go check out some of my other YouTube videos. But just a really quick lesson is market structure is just saying that you've got a trend, you've got a high, you got a pullback, you've got a low, a higher low. And now if we're in an uptrend, you want to see higher highs and higher lows. So the opposite is true for a downtrend. You've got a high here, we print a low. We are unable to breach this high, so now we are making lower highs, right? And lower lows. So again, there's more details in that other YouTube video, but just for a quick reference to what I'm referring to, the candles at this key level turn from green to red. So this is a good time to potentially look for reversals, and noticing how the candles are reacting, the wicks and the candle bodies near that key level will give me an upper hand and edge when I am looking to take reversal trades. Okay, so let's do more examples of bullish candles. Now, there are certain names for candle patterns. There are so many of them. As you can see, hammer, inverted hammer, we've got bullish 3-line strike, bullish engulfing, tweezer bottom. There's just so many. I want to give you a little piece of advice. Remembering the names of these patterns is not important. At first, at least. If you want to obviously have flashcards later on and remember every single name, that is definitely going to be something you can do. But right now, the most important part is you just understand what they have in common. And you understand the general theme of bullish candles versus bearish candles. Now, for example, the hammer, which is shown right here, the hammer has that long wick on the downside, right? So that tells me it's that rocket example being pushed up, which is a good sign if you're bullish. You've got buy orders sitting down here, which caused the candle to rocket to the upside once those buy orders were hit. Now, the inverted hammer could be a little confusing for some people because it looks like the opposite. But the key part here is the inverted hammer is green. So pay attention to these two right here. Don't get them confused and automatically think that the inverted hammer is a bearish candle just because it has a long wick on the upside. There are going to be exceptions to that, and that is one. But generally speaking, obviously knowing the red versus green candles, you can also just pay attention to how the wicks are reacting. Long wicks on the downside usually mean buy orders pushing it up. So if you want to pause this YouTube video and study some of these before we move forward, you are welcome to do so. But like I said, I'm going to give you the need to know basics. And right now, I don't think understanding all of these names is what you need to know. Next is the bearish candle pattern. So as you can see, we have got that next example, which is showing you that long wick on the downside, but we have got a red candle versus a green. So just a reference, going back up here, we've got the hammer, right? The hammer looks just like the hanging man. But notice that the candle body colors are different. So this is red, the other one is green. So pay attention to the colors of the candles. And then you've got a shooting star, which mimics more of what we were generally talking about. This shooting star right here means that there were potential sell orders sitting at the top. The candle moved up, could not breach those sell orders, and it rocketed back down. So this shooting star example, you can see it's the same potential thing we talked about before, that the long wick on the upside usually means that there are sellers sitting there that are present. Once we go up and tag those sell orders, the candle is then rejected and pushed back down. So if you're looking for a potential reversal at a key area of interest to go short, these are the type of candles you want to see print. And these are some other examples here, right? So the shooting star is what we just looked at. We've got tweezer top, bearish engulfing, evening star. And the engulfing candles are pretty easy to recognize. All it means is that the candle that has printed this bearish engulfing is just engulfing the prior candle. So it is completely taking over the length of the previous candle. And this can also be considered a flush candle is what I like to call it. And then going back to the bullish examples here, the opposite is true for bullish engulfing. Right here, all it means is that the next candle is very green and it is engulfing or taking over the prior red candle. So these are great candles to watch for as well. The engulfing candles combined with paying attention to how the wicks are reacting at key levels. And those are my personal favorites to watch. Like I said, we'll go into more examples on exact patterns that I look for in real time in just a minute. But before we do that, we need to also cover the Doji candle. So the Doji candle is a very neutral candle. We kind of went over this already, right? With that previous example, the candle wick on the top and bottom was very long on each side, and the candle body kind of closed neutral in the middle. Well, the Doji candle usually represents a lot of indecision, but this can be very telling, especially if you're paying attention to the next few candles to come. Per this example right here, you can see that we had a Doji candle print right here, and shortly after we saw a nice reversal down and a trend reversal. So Doji candles don't necessarily mean things are always going to reverse shortly after, but my key point here is there's a lot of indecision between buyers and sellers once a Doji candle prints. It's a great time to double check and triple check that the trend is still going, and that if it is about to reverse, you know what to look for next. And so Doji candles play a big part in my potential trend reversal trades as well. We've already been over 1 and 2, but we're going to go in and zoom in on a closer time frame. However, from that larger time frame, when we reach a key level of mine, I am looking for how the candle body and the wicks are closing. So if I'm looking to buy near support, right, and I'm looking for a trend reversal to the upside, I want to see when we reach my key level of interest, how are these candles reacting? Do we have long wicks on the downside? Are we seeing a potential Doji candle? Are we starting to see red candles turn green? Are we potentially seeing higher lows form on these candle wicks, which is also something very key and important to look for. So if I was looking for a buy, which I was last week on oil, we caught a very nice buy on Friday off of this 81.37 level once again. Then this is exactly what I was looking for. I was watching to see how candles reacted when that level was hit. And so far, every single time that we came down and hit this level, we saw a bullish reaction, which was long wicks on the downside. So zooming in further, I like to start from the larger time frame and work my way in. You can see as we move in from the 1 hour candles to the 30-minute candles, we've got a nice red bearish candle, but it's matched with a green candle. And so now that we're at my key level, I need to pay closer attention. How are these candles reacting? The next candle is red, but we've got a long wick on the downside here. So it's still not an exact buy entry, but notice that we are inching higher, forming higher lows on these candles, which is a bullish sign, just based off of market structure. So the next candle opened and closed and was bullish over my key level of 81.37. And the next candle was an insanely nice momentum candle with a long wick on the downside, upwards off of my key level of 81.37. So these were all key points on why. It wasn't the exact reason why. There was other things involved, but it played a big part in why I decided to go long on this trade at this key level. So we're going to keep working our way in, but I do want to highlight before we do that this is a Doji candle. So just know that's exactly what it looks like. So let's go from the 30-minute to the 15-minute and see what the candles look like at this stage. So I'm going to move this over. We're getting too much. There we go. Too much to one side here. Okay, so now that we are solely focused in this example on bullish candle patterns because we are near a key level of support or potential support. So I want to look for potential bullish candles. And as you can see, when we work our way in here, and we zoom in, we had a nice downtrend with these bearish candles, right? Big flush candle here. But notice once the level was hit, the candle reactions start to change from big red bearish candles to a smaller bullish candle, a big green bullish candle. Then we've got a little bit of a red bearish one here as we reach this previous area where we dropped off. Next candle is looking very bullish, right? We've got that long wick telling me that buyers are sitting here. And when this candle dipped down, it was eating up buy orders and got pushed back to the upside, aka it was the rocket to the upside, right? That's very bullish. And so these candles held above my key level. This candle looks bearish, but what I want you guys to take from this is when you especially start to get into smaller time frames of candles, don't obsess too much over the red versus green candles. What I start to look for is, are the candles forming patterns, aka trend? So is trend starting to change? And in this case, you can see that the trend was now shifting to the upside. So this is very key and important. I see a lot of new traders get really confused. I like to pay attention to the colors of the candles and the overall structure of the candles from that larger 1 hour chart. And some people also use the 4 hour as well. I do, just depending on the setup. But once I work my way in, I am not obsessing over red versus green. I'm now looking at the overall structure of the trend and how the candles are printing and forming that new trend. Is a new trend forming? That's what I'm trying to say. And so as you can see, we had a bearish candle down, bullish candles up. But technically that's a bearish candle, bullish candle. We're not looking at that anymore. We're now seeing when we dip down and we test this new trend that's forming, what's happening. And you can see when that trend is being tested, we are shooting back up. We're holding and we're forming higher lows, which is a great sign to look to flip long. It's not the only sign, but it's part of it. Let's switch this thesis here to a bearish example. So right here, I already went over this with you guys. When I reach a key level of potential resistance where I want to look to go short, I'm doing the same thing. I'm looking to see how candles react. Now let's go back to that 20-day 1 hour time frame and let's zoom out. Remember, we looked at what was happening with the 1 hour candles. We had really strong momentum to the upside here, but this candle, even though it's green, right? Let's zoom in a little bit further. Even though this candle is green, it still has that long wick on the upside, which to me is telling me that there are sellers up here that push this down. And it's also telling me that buyers are not as strong because we've got way more wick, which is way more indecision. So yes, we may have closed green, but it's still not giving me confidence to continue long. And it's still giving me a reason to potentially look to go short. So now this next candle that printed opened up way lower than this candle, lower than the 50% mark, or at least right at it, which is a very bearish sign in my opinion. And so once this shift started to happen from green candles to red candles, then I'm going to work my way in and see, okay, what does the 30-minute candles look like? We've got green bullish, green bullish. This one is now a very bearish candle. We've got that long wick on the upside that had pushed it down. The next candle to follow is also very bearish, and you can see that yes, we might have had some little bullish candles here and there, but the overall structure of these candles as we have printed is down, right? We are lower lows, lower highs. That is a bearish market structure when it comes to the candles. So all I'm saying is once the candle started to print here and we changed direction, we've got a high, we've got a lower high, a lower high. We're just still inching down. So the overall structure of those candles started to change. And as we zoom in, I'm not caring so much about the colors of the candles. I am now caring more about the structure of the candles. Is the structure down, bearish, or is it up, bullish? Are we making lower highs or higher lows, vice versa? And so as you can see, once we hit my key level here, we hit it on this candle, the next candles continue to open underneath my level. So as long as we're opening underneath my level or rejecting or wicking off my level, like something like this, then I want to look short focused because we are now, in my opinion, rejecting that level and bears have taken control. Okay, so that was a lot of information so far. Now let's move into step number 3, which is understanding the trader's psychology and what that means when you are analyzing candlesticks. In order to do that, first, I love to bring up this chart because it's so accurate, right? When you are in the markets and you're a trader, every trader goes through this wave of emotion, extremely positive sentiment to extremely negative sentiment. You start out optimistic, you have FOMO, you're feeling great because you're green. And next thing you know, the green position, which you did not have a stop for or potentially a take profit for, you didn't really plan it. It starts to go red and you're in denial and panic and doom and depression. You finally sell your position and next thing you know, you feel relieved. and you're optimistic, more times than not, that position starts to go back up and you've already sold for a loss, and now you're right back to feeling depressed and crappy again. We've been through that, right? The emotional cycle of trading. But there's also an emotional cycle of candlesticks and what they mean and what they're telling you. For this example, we're going to go back to the trade that I took on Friday for oil, because there was a lot of trader psychology and understanding the sentiment of traders at this level that was involved when I was taking this long trade. Okay, and going to Discord, this was the exact chart that I posted at 8:10 a.m. Eastern on Friday in regards to the oil long trade we were looking to take off of 81.37. So you can see that we were forming higher lows here. So we had the first one here, second one here. And so I love my little drawings that I post to the group to just give them an idea of what I'm looking for and what I want to happen. So this means as long as we were holding higher lows over 81.37, I was looking to go long back up into this area. You can zoom in, but overall the larger target was near that 83.70 mark. And at 9:10, an hour later, here's an updated point of view. You can now see that we had fully formed that upward trend here where we've got 1, 2, 3 higher lows, meaning structure had started to shift. We were still holding over my key level. And so this trade took a little bit longer than we had hoped, but it eventually worked out and paid off, and patience paid. So I wanted to show you this just to show you what I was looking at before the move actually happened. I know it's always easier to show in hindsight, but these are pictures that I posted before anything happened, because that's how I do things in Discord. As I post real-time pictures and screenshots and narratives with my drawings on what I want to see happen at each key level. So this right here, remember 8:10 and 9:10 was when I posted. So we have got 8:10 right in here, and then we have got 9:10 right in here, right before the nice move to the upside. So this ended up being a really textbook play. And again, the candlesticks are what I want to show you guys, because that was part of the reason, other than obviously my key levels and understanding price action and market structure. The candle's reaction at that level was ultimately a big part of why I decided to stay long focused in that trade. So as we zoom in here, you can see, and now we're on the 5-minute time frame. So I execute a lot of my trades on the 5-minute time frame. You can see we dipped down below, very bearish red candles, 3 in a row here, but we finally started to catch a bottom of support, hence the reversal from red to green candles, and now we started to move up into that 81.70 level. Now, we did not just go straight up. Obviously, we had to form a sort of new direction, and that takes time because you need waves to form of either a wave up, printing higher lows, or the opposite. In this case, since we're bullish focused, we want to see waves like this. So we've got a wave to the upside, or a swing high to a swing low, and a swing high to a swing low. But notice that the swing lows, because we're paying attention to overall structure, remember, of the candles, not just what they look like, but overall what structure they're forming, they are now wicking off this trend line. So this started it right here. Then we've got our second higher low, and then our third higher low. And that is when we finally saw a nice momentum candle to the upside. So if I didn't see these nice wicks and these candles forming the structure that it did, I probably would not have had the confidence to stay in my long trade. Because if I saw something like, let's say that after this candle printed, this next candle printed underneath this fib level and then started to break this trend line and retest these lows and then break that low, that means that the structure is not there to see a potential reversal to the upside. We are failing and we're forming resistance underneath this key level, meaning I'm not long focused anymore. So when we reach key levels, paying attention to how candles react is a huge part. And that's where trader psychology comes into play, because traders who are just obsessed over the micro details of candles, their names and their patterns and the colors, right? They might see this candle and say, oh God, I got to get out of my long position. When in reality, we have not broken this previous low right here. So in my mind, there's no reason to exit that position unless we fail to make these higher lows, right? And you can see that we did dip down, but we held the previous low and that previous support that had formed. And so there was no reason for me to abandon that long thesis. And so this is where candlesticks and understanding the psychology also on different time frames. So don't get so sucked in to a smaller time frame that you forget the bigger picture. You forget how candles are reacting also on the 15-minute or the 1 hour. Because these 5-minute, 2-minute, 3-minute, 1-minute candles can really suck you in to missing the bigger picture. And if you're going to be successful, in my opinion, that comes from understanding what the bigger picture trades are doing. And the psychology behind those bigger picture candles is really, really crucial. And just to give you like a little bit more context on this trade and trader psychology, I almost stopped out right on this candle right here, because we started to dip below my key level of 81.37. But I did not panic because, once again, I'm looking left and looking at the low of this previous candle that had dropped down. And I'm saying, okay, as long as buyers can hold that previous low, I'm gonna stay true to my long thesis. And once the candle dipped below, we did not breach that previous low. Not only that, but we started to see nice momentum to the upside. We reclaimed that level, and this was our huge momentum candle that sparked the move that got us to 82.70. And you can see right here at 9:36 that I did post. I took off size at 82.30, but I left my runner for 82.70. Oftentimes, if I do have larger targets like that and I'm trading with size, I will scale out at target 1, 2, or 3, just depending on how we react. Now, 82.30 was my target before 82.70, and you can see right here, this candle, once it printed, it made me a little nervous to hold my size, because to me that was looking like a rejection. Now, in the grand scheme of things, it was just the move breathing, but I didn't want to take that risk, and I was perfectly happy with this move right here. So seeing that candle react the way that it did, it was red. It had a nice long wick at the upside, and it was followed by another bearish candle and another bearish candle. I went ahead and took that as a hint to exit my size and then leave my runner for that larger move so it can breathe. RSI was getting hot. It's only normal that we see a pullback, even if we are in now an uptrend. And that is a wrap for today's crash course on all things candlesticks. I hope this guide has helped you better understand not only the anatomy and the basic structure of candles, but also interpreting the psychology of buyers and sellers and how I personally use them every single day. Like I said, it's not getting obsessed with the pattern names or understanding the red versus green on those smaller time frames. It's not that, but it's more so, how can I interpret them to also see the bigger picture, to see the structure of the trade, and utilize all those moving pieces to help me become a better trader. I appreciate you guys so much for watching this video to the end. If you found value in this, make sure to give this video a thumbs up. Like I said, I do have some freebies in the description box down below. There is that free quiz. There's also a free futures workshop, which goes over the trading brokers I use, prop firms, all of that good stuff. And if you are interested in more content from me, I also try to post on my Instagram, which is linked down below. But that is a wrap for today. Thank you guys again for watching, and I will see you next time.